Well, thank you all for joining us today. I'd like to welcome you to today's webinar discussing navigating the regulatory minefield in 2022. This is part of the CWDL webinar series on key mortgage industry topics for our clients and friends in the industry, and it's a timely one at that. I apologize for my raspy voice. I just got back from the TMBA, so with Troy and Dustin. We're extremely excited to have our guest and regulatory expert, Troy Garris, founder and managing member of Garris Horn, LLP, joining Dustin Pfluger, CPA, and mortgage banking partner at CWDL. Troy deals with federal and state compliance, enforcement defense, and company formation, mergers and acquisitions. And in these areas, Troy represents independent mortgage bankers, community banks, lenders, servicers, title companies, secondary market investors, and equity funds. So he's very well versed and we're happy to have him with us. A couple of housekeeping items. Please feel free to type in any questions in the Q&A area. We usually get to most of them, but if we don't, we'll certainly follow up. With that, let's get started.
Well, thank you, Casey. And thanks, Troy. It's been all of, like Casey hinted to, it's been all of 24 hours since we've seen each other last in person. So thanks for jumping on this with us. So yeah, I mean, with that, I guess we have a good amount to cover today. I mean, we're gonna start off with some CFPB stuff, probably move into, fair lending, LO comp, some RESPA stuff, some UDAP, and then if we have time, some licensing and employment stuff at the end. So pretty much everything regulatory and compliance related, we're gonna try to cover here. So I guess with that, let's start, I think, with the CFPB. I think is probably the best place to start. I think that's probably the hottest topic right now and whatnot. So I think just overall, why don't you, if you want to start, just give us an update, of the CFPB, what's changed in the last year, kind of just overall.
Yeah, and thanks, and it's great to be back with you guys. CWDL is a fantastic company, and I know we overlap on a lot of different clients, and I think it's always helpful both to our guys and hopefully to yours as well to hear some of this, and just so that everybody knows, we're intending to do this kind of like a dialogue. So rather than any kind of a presentation or just one-sided conversation, it really is a combo. And so we'll try to make this interesting, relevant, and helpful for everybody. So on the CFPB front, there is a lot going on. Of course, we have the new director that came in, the official director. We had an acting director for several months from the beginning of the Biden administration into when the current director became was confirmed back in fall of last year. And the new person, so Rohit Chopra, Director Chopra, is a lightning smart individual. So he comes out of Harvard with a BA. He went to Wharton for his MBA. He did a stint in consulting, and he really is very passionate and intelligent about the way that he operates and he works, and passionate about the things that he wants to focus on. And it may not be what the mortgage lenders out there are wanting to hear. Now, his coverage, of course, is way broader than mortgage, and we're focusing mainly on mortgage today because that's where the bulk of our client base is. And I think that's true for a lot of your people too, Dustin. I know you guys focus heavily there, right? Yeah. So this gentleman, I mean, he's aggressive. He's not a lawyer, so he thinks differently than lawyers do. And and he's not a CPA either. If you think about, for example, a loan officer or branch manager type mentality, of course, he's at a very senior level now. But if you think of that sort of mentality, and he's a business guy, and he wants to think creatively and think of ways that he can do his business differently from the way people have in the past, and then place that person in a regulator, then I think you see some of what it makes sense about some of what we are seeing come out of the CFPB right now. In some ways, I think he's probably trying to build his resume. I don't know if you have thoughts, Dustin, on, does he seek in some future vision of his, maybe some some higher office, maybe even. I don't really know what's higher than CFPB. If you ask me, it's kind of the best of all jobs, probably.
Yeah. No, not really. So yeah.
Yeah, and I do think he's also trying to establish, his own reputation, and just like I think when the interim director Mulvaney came in during the early days of the Trump administration, Kathy Kraniger came along, and she was trying to make clear, I think, that she is not just the assistant to the prior person. She was establishing her own way, and I think Chopra also is doing that. We see a lot where he is, in my view, he's trying to out Cordray, and that can be a little disconcerting for some people. So go ahead.
Well, I was going to say, so with that, I mean, what do you see his, starting with just short term, what do you see as short term priorities being?
Yeah, so I think he's made it pretty clear that focusing heavily on DE&I, diversity, equity, inclusion, discrimination issues. I think that is probably where a lot of his focus is. He's made that very public. Even the acting director that came before him during the interim period, I think there was a fair amount of messaging going on that this is where he wanted to go, assuming he was confirmed. And now that he is, I think that the dissemination coming out of the CFPB, both in public comments and written statements, press releases, and the like, I think you can really see it really is that discrimination at fair lending, which we'll get into it a little bit deeper detail in a few minutes. I think that's going to be his short-term goal, at sort of the top of the hill there. There's also a lot of other things going on, and also I think you got to take into account that he is he comes out of the FTC. He started at CFPB a long time ago when it was first getting up and running. He was helping Elizabeth Warren sort of get it into place. But then he went over he did a few different stints, but then he was over at the FTC as a commissioner, and FTC, its statute is UDAP. That's what FTC does in large part. And I think he comes at it with that mentality. So in addition to being a business guy instead of a lawyer, he's also, he's very facile and quick, I think, probably to use UDAP in the way that he operates and thinks.
So I guess short term, we're talking there. So I mean, I say, does he have any other long term priorities? Which long term is kind of a tricky word because he has 2 years left, possibly, then longer if depending on what happens. But so I mean, what do you see him doing long term? And then even after that, I mean, if you have any speculation what might happen even longer term? Let's go with that.
So I think he is trying to, in his view, it's the perfectly right thing to do. He's trying to right the world. He's trying, he's some might call him a crusader in this sense, but he's trying to make the world the way that he thinks it should be. I do think that there are some areas where the CFPB at this point, especially under Director Chopra, now has started to turn, where we've seen this in the past with other agencies, and it's kind of typical. So grabbing turf, I think. So he's out there and he's talking about lots of things that sometimes just in passing, but things that you got to wonder, like, is this really what the CFPB is supposed to be doing? Because he's focused on in the credit reporting agency area, he's focused on, for example, making sure that that those credit reports are not harming potentially vulnerable people, but it creates some problems because lenders need good solid indications of what history that people have of making their payments to on loans and credit and the like. And so, and yet he seems to be focused in large part, or in many ways, on things like that. So, for example, he's talked about medical billing, and he's talked about there are a lot of consumers that are burdened with medical bills, and he makes the point, and it's true, that people don't choose to suffer medical problems, and so the medical bills that they have to sustain in this sort of crazy area where medical costs outpace a lot of normal types of inflation. He says, well, consumers shouldn't be burdened with having lower credit scores in many ways based on bills that they didn't choose to incur. Of course, that leaves aside the issue of, will they be able to make the payment on their loans? It sort of, again, it sort of chips away at the credibility of the credit reports. But he does the same thing in the sense of he's talked about initiatives where he wants the victims of human trafficking not to have to suffer from having their past experience cause their credit reports to suffer. He's in a lot of ways he really is trying to chip away, without going to Congress, trying to chip away at the CRAs. I think also you see that again, this DEI concept where he's trying to broaden communications. So he revamped the website to try to make it better at getting messages out to people. They've started posting in multiple languages. So just recently they had a press release on a lawsuit that was filed by New York and the CFPB, and they put out the press release in Chinese, Spanish, and English. There's a lot there. You can also see that with press releases and blog posts and speeches, whereas in the past it used to be you'd get a press release. Now it comes out in various forms, almost like if somebody, similar to where somebody's posting on Instagram and Facebook and Twitter all at the same time, sort of like, changing the way that the agency communicates. I think there's a lot there. He's talked about junk fees quite a bit, and it's sort of in this turf grab concept. He mentions lots of things regarding junk fees, lots of different items that he takes issue with. So things that you would expect, like late fees and fees for particular services that last minute type fees that people sometimes can't avoid or don't avoid for whatever reason. But then he also will toss in something like, and concert venues charge fees, and you wonder, concert venues, like, is that really what the CFPB is going after? I think it is just kind of a very broad net that he's trying to expand into, so that they have, under their UDAP authority, kind of like FTC, sort of a much broader reach to get to places where they don't know where they might go, but they want to have the ability to do that if they choose to in the future.
Got it. So I think you touched on it a little bit here, but just in light of current market conditions, how does this all intertwine? I mean, how do these his priorities and activities align with what's going on right now in the industry, I guess?
Yeah, I mean, this is a critical problem, I think, for mortgage lenders. Again, it's broader than just mortgage, but it's certainly true for them right this minute. So, I mean, there are many sides to this particular issue, many facets to the diamond, so to speak. Because on the one hand, you have the economic stress for consumers. We have, and this has nothing really to do with the CFPB, right? There's inflation out there. There's talk of people being underemployed, especially in certain areas. There's just a lot going on where people are struggling to make payments, to keep up with what's going on. There's, we have a temporary reprieve on some areas of responsibilities, for example, student lending and mortgage forbearance for certain people. So you have that stress that's actually on the consumers themselves without the CFPB. Then you have the regulatory stress on our clients, our lenders, and this is just the stress of things like the CFPB or other regulators too, but CFPB in particular, talking about going to ramp up the pressure that they're putting on lenders in a variety of different aspects. Again, focused in many ways on the diversity, equity, inclusion space, but other areas too, the junk fees, medical fees, et cetera, and really highlighting the problems for consumers at a time when consumers are facing these issues. And then at the same time, we have just the pure business kind of a stress that everybody is facing, where rates are now up over 2% where they were just short time ago. And so everybody is searching for and that, which sort of killed off the refi market, right? And so everybody's searching for purchase money business at a time when there's not really a whole lot of inventory, at a time where the rates are putting lots of people out of the capability of qualifying for loans, and you entangle all those different risks and issues together. And I think the stress and the pressure that CFPB is going to be putting on people, and is already putting on people, creates a lot of concern for a lot of our clients.
So, I mean, I guess that kind of jumps into another topic. I mean, is anybody in the, I mean, do you foresee any relief given to the mortgage industry for some of these issues, like like you said, increasing rates, or I mean, even COVID related stuff that's still, we're still seeing trickle out. And I mean, I think, they gave a stat the other day at the board meeting that, I mean, there's still a significant number of loans that are in forbearance and whatnot. Right. Is there any other kind of relief you're seeing come out of that, or because of that?
Yeah, I mean, it's interesting, right? Like, I don't really foresee a lot of regulatory relief. I think the regulatory pressure is going to ramp up. I do think that people are less likely at the moment probably to call up their lender and say, hey, I know it's a ways out, but I've been adversely affected by COVID, so I want to get a forbearance. I do think that even though that's available still, and there's also the half money that's out there that is a possibility for people that want to or that need access to those funds, and it's being divvied out by the states. But it's I don't think from a regulatory front we're going to see much in the way of relief directly for lenders from the regulators like the CFPB or other regulators for that matter. I mean, HUD's still active out there. DOJ, we anticipate, is going to be active out there, and state regulators as well.
So I guess last question on the CFPB, and this wasn't one, so hopefully you don't mind answering. I mean, have you seen much enforcement action actually come out of the CFPB in the last couple of years? I mean, has there been a lot, or I mean, any examples or anything like that?
Yeah. So there has been a fair amount, and despite what a lot of people say, that the CFPB under the Trump administration was not laying idle on the sidelines doing nothing. In fact, there were a number of enforcement actions came out of CFPB under Director Kraninger during her period at the agency, and some which were sort of surprising. And they did take different approaches under her directorship. Some that probably made it a little more potentially lenient for lenders to work through a process, but others were more aggressive than you might, than even we would anticipate. And certainly different from the sort of conventional wisdom of, well, if it's a Republican administration, they don't enforce anything. That simply is not true. But so there were actions under her, but then and then under acting director Wagyu, but under Director Chopra, I think he's only now he's I guess several months into the 7 months perhaps into the job, but he's firing on all cylinders. He's got his staff lined up, and they're going hard at the issues that they feel are very important. And we've seen this from a bunch of different angles, and there are civil investigative demands that are being sent out. There are exams. He included fair lending into the exam manuals itself, so that now that in addition to examining for the regular regulations that they enforce, he's made discrimination a subcategory of unfair deceptive acts and practices. And so they are just getting started in my view. And you're right, because of the possible change of administrations, there's a possibility that it stops at some point, but at least for the foreseeable future, I think it's all guns blazing at the CFPB.
Okay. So I guess with that, you just brought it up. I mean, fair lending. I guess what laws out there apply to fair lending, and I guess overall, just big picture, like who enforces all the different laws? Like so what's there out there, and then who's really enforcing those laws?
Yeah, no, that's a great way to start, Dustin. It's because people talk about fair lending, and there is the fair lending concept, right? But there's not really the fair lending law that you point to and say, well, that's the law. It's really, so there's a COA that the CFPB enforces, and it prevents discrimination on all the bases that people typically think about, and a few others too. But so there's a COA under CFPB. There's the Fair Housing Act. Some people refer to it as FHA, but it's not the FHA insurance pool. It's Fair Housing Act, and that's enforced by HUD, and then DOJ gets involved with them as well. And so those are the two big primary ones, but you also have some requirements come out of FCRA. You have some requirements. HMDA collects information and requires people to submit that publicly, that HMDA data has been expanded recently. So it's really a collection of a bunch of different laws that are fair lending laws, so to speak. And now I think that Director Chopra is taking the UDAP and making kind of an end run around what is a complicated batch of laws by using UDAP. So there's court law on a COA, for example. There's court law on the Fair Housing Act, including a Supreme Court case that in the mid-teens, 2015, I think it was. The Supreme Court said, yeah, in fact, there's a disparate impact theory available under Fair Housing Act, although they made clear that it wasn't so easy to prove. And now I think what this, again, a creative individual, Chopra and his team have come up with are that, well, even if we cannot prove specifically a Fair Housing Act violation, even if we cannot prove specifically in a COA violation, we still have UDAP, which is a much more relaxed standard to try to go after somebody. And so I think that's really the laws. Now, again, I mentioned CFPB, HUD, DOJ. You could also have the attorneys general that out in the both at all of the state levels as well as at the U.S. level, the DOJ, and so there's plenty of regulators to come after people in that sense. So
you touched on it a little bit there, but I mean, not specific examples or whatnot. So what are you seeing just in enforcement? Like, what are you on the enforcement side of this? Like, I mean, what exactly are you seeing? What are you hearing? That kind of thing. Yeah. And I guess secondarily, how are lenders responding to that as well? I mean, I guess that's kind of a two-part question there.
Right. So the thing is, fair lending. So what we're seeing is that HUD right this minute has an initiative to go out and talk to a bunch of lenders because the laws that apply, including HMDA, require that information be publicly made available. So it's pretty easy for a HUD or a CFPB or a state AG, for example, or even consumer advocates to go out and collect and try to analyze data. Now, it's not comprehensive enough to give the picture exactly about whether a particular lender is discriminating or not, but it's certainly enough information to raise yellow flags. And so HUD is out talking to people. CFPB is out talking to people. CFPB is continuing some cases that they had from prior, and they are trying to again, in my view, trying to make kind of an end run around the specific laws, because fair lending cases are hard to prove. They're hard cases on both sides, actually. they're difficult cases, but I think the CFPB is its view, and this was true under Kraninger too, so it's not a Republican Democrat thing, but its view, I think, is we think the world should run like X, whatever the X is. And if we can't get Congress to pass a law, and it's difficult right now, right? To get Congress to pass a law to make it work like the way we want to, or much less a constitutional amendment, of course. If we can't change the law, why don't we just make it? And we can make it by telling people what we think is the rule and what should be the rule. And they can disagree, but if they want, they can fight us. And most people don't want to fight. It's just too costly. There's a risk of losing always, of course. And then it's the fighting City Hall problem, right? It's the problem of, well, you could win the battle, they show up next week and claim something else and you lose that war. So there is enforcement going on, and it is an area that is causing a lot of pain for a lot of people.
So what, I guess then what, I mean, I guess just overall, what, I mean, either Fan Landing or CFPB, I guess on this topic, I mean, what should lenders be doing right now to prepare or make sure they're compliant or out of the crosshairs or targeted or whatever you want to say? What should they be doing?
Yeah, so I don't know what you see people doing from the angle that you guys take, but I think of it as every lender in the United States has risk of some kind. And that's probably true for all businesses, again, but we're talking mortgage, right? So every mortgage lender has to figure out how to address what is fairly murky laws in fairly murky facts and in an over-aggressive regulator that it has, comparatively anyway, it's almost unending resources as an advantage. And so rather than be the sort of low-hanging fruit that is easy to go after, and that is probably issues that you might have in your company that are pretty easy to poke at. I would grow my fruit way up in the tree, so that as if some regulator sees you up there and says, well, I want to go after that company because I think they're doing something wrong. Well, along the way, they got to pass up a lot of what seems to be pretty low-hanging fruit that they could just get their hands around and make their lives easier. They're busy. They have a lot of people. They have a lot of money. But it is, they still, at the end of the day, they have 8 hours in the day. And if there's an easier case to go after them, then probably it's where they're going to focus their time. And so you couple that with the idea that most of the people at the agency come out, and this is true for HUD and others as well, is they come, that are focused on this, they come out of agencies that look to infrastructure, and they look to policies and procedures, and they look to building out systems that seem like the system can run by itself, or by itself meaning that it runs smoothly, I guess, with the policies that are in place, and that you have compliance teams that are monitoring new developments in the law. They're making sure that people know what the new developments are. They're building them into the system. They're testing. They have this whole infrastructure of compliance, this compliance management system, as the CFPB calls it, and then building that out and making sure that when the CFPB shows up, and even if there's a problem, you say, look, we understand that there could be a problem, but we've identified it ourselves, and or we're aware of it, and we are working on it, and we're fixing it, and we're training our people, and we're making ourselves better every day. That creates a much more holistic and healthy system in their minds than the system that a company that has much less in the way of infrastructure has. And that's kind of true for what you guys do too, I think, Dustin. It's if you put it in the context of the financial audits, it's a similar concept, right? We want systems in place. We want checks and balances. That's what we want to see. We don't want people writing down what they made last night on the back of an envelope.
Yeah, yes, for sure. You know what, and this may be a little bit of this is off question, so if this is a little bit of speculation you don't want to answer, that's fine. But in enforcement and stuff like that, I've always heard it's kind of subjective, whatnot. Do you think they use hindsight in stuff, and like in whatever we're talking about? If they say, well, the last 2 years y'all have had, your best years ever. Like, I mean, do you think that's being used against mortgage lenders in enforcement, or no, they're just not really taking that into account, or not, or just curious?
So I do think it comes in a few ways, really. So one is that, mortgage bankers have never been given much empathy for anything, right? I mean, during the last downturn, for right, for wrong, however it came out, mortgage bankers got blamed for most of what happened in 07, 08, 09. And, it's a fairly easy scapegoat. It's, it's it's a group that's easy to hate in the public, right? And these people are politicians at the base, right? And so, it's easy to go after them. I think when people learn that, during times where people were struggling during the pandemic and people were unemployed and people couldn't pay their mortgages, and oh my gosh, like the mortgage world made more money than it ever had ever. And I think you get double non-empathy marks for that. And so I think where that comes up probably is in the context of, if somebody's having difficulty paying their bills, for example, or somebody has difficulty getting a mortgage or affording a home these days, then it's easy to say, well, if the bankers hadn't made so much money, this wouldn't be such a problem. Or in the penalty phase, you can afford a lot more penalty because you made so much money in recent years. Now, that's probably just wrong, but that's probably how it's used.
Well, I mean, we've kind of seen that. I mean, we've talked about this issue a lot. This was not on the topic list, but we've seen this a lot with the SBA with the PPP forgiveness. Yeah. Like they're using hindsight now, or I guess it's probably been cleared up. Maybe we'll get to that at the end if we have some time to talk through that a little bit. But that's one area I feel like they're using some hindsight, a government regulator. But anyway, so I guess
one of the stalwarts here, of course, is the NBA, right? So we and I just got back from Texas NBA, a great organization and fantastic at the state level. The national NBA, of course, is all over these issues as well, and trying to help out. And they're great at educating regulators. You can't change their mind exactly, but you can educate them about what the needs and preferences are.
Yeah. So, okay. So jumping in, I'm going to move a topic up because you've been hitting on it a lot here, and just want to feel like it segues in. So with UDAP, I mean, you touched on it here and there. What is the risk these days, and what is the risk? Is there a lot? Is there a little? Kind of just expand a little bit on the UDAP risk right now.
Yeah. So typically when we talk about UDAP, we're mainly focused on areas where it's typically like a marketing kind of a focus. It's typically on outreach to consumers. It's the question of, can a consumer be, fall into a trap or get tricked last minute? And I do think that there is a lot of exposure there, and I think it's getting worse in this highly competitive market where you have lots of loan officers, lots of mortgage companies now running after a smaller and smaller pool of potential applicants. And so people are, on the business side, people are super creative, and not everybody runs everything past compliance always in that kind of market. And even if they do, they can. There's a lot of push on compliance to approve programs and advertisements, marketing that maybe they wouldn't have approved in the past. I think also UDAP itself, because it's so malleable, is, and again, with Chopra coming out of FTC, that's a big risk that he uses that even more than the Republicans did. Director Kroeninger did, and that was one of their go-tos was, look, it's really hard to prove a RESPA violation. We have to, there's certain criteria. We have to actually find the evidence and so on. And UDAP is so much easier to establish as a claim that is kind of a fallback for something the CFPB doesn't like. or a state regulator doesn't like, because all the states have their own versions of UDAP as well. And so it's an area that I think is being used already, and it will be used even more going forward. And there's a lot of focus on, gimmicky type issues, but if you start thinking broadly and you think, well now Director Chopra says he's going to use it for fair lending, and they built it into their exam manual. And the exam manual is, it's written in a way that, some of the issues that they seem to think should be the law, but are not, are baked into this language in the exam manual. So there's language in there that very easily could be expanded to say things like what they ask in some of their requests for information. So that they'll ask, and actually there's a case sitting over in the court in Chicago right now too, where they've made these allegations in public, where they use as evidence of discrimination that the staff of the lender was not ethnically or racially diverse enough for their own belief, whatever they believe is diverse enough. They use that as evidence of what, discrimination really on an employment sort of a level is what they're really talking about, but they're using that as evidence for discrimination in lending. And so if they can push their mission or their message of what they want the law to be through that sort of exam process, through enforcement actions like that, I think they believe the lenders will just start doing what they want them to do, even though it's not the law. That, which, by the way, as a lawyer, I think is deplorable. And that's if we're a nation of laws, and that's what holds us together and separates us from the countries that that where there are dictatorships and so on, and we pride ourselves on that, then having somebody who can just make up the law and enforce it through other means is pretty shocking, and maybe even some might call it intellectually dishonest. It's problematic. It's really problematic. And I'm not picking on Director Chopra there. This is just broadly speaking. It's a lot of regulators and a lot of way that people are operating.
Well, I guess with that, we'll see a common theme here going through these. I mean, so what, like, what can lenders, again, people on the phone here, how can they avoid, or mitigate this UDAP risk? I mean, what do you recommend there? What do you see people doing? That kind of thing. Yeah.
So on the UDAP side, I think the best way to avoid UDAP issues is just to approach the system through a full disclosure approach, first of all. So make sure that everything is clear. I know nobody reads the disclosures, and I know that it's a problem, and there's so much paperwork and people's eyes glaze over. But those disclosures, often written by the regulators themselves, really help. And so when somebody comes in and says, we think that you've been deceiving people and taking advantage of them, if you've made efforts to make sure that they understand, then you go a long way to if you've raised the yellow flag, to lowering that yellow flag and making that issue go away, and having that compliance management system in place, so an overarching system where you are building infrastructure. It doesn't have to be complete today, but always continuing to build out that infrastructure of compliance. I think that helps a lot. And then I do think, and this is, again, I'm sort of getting sucked right into that position that I find pretty appalling. But nevertheless, if the regulators think that you need to be making sure that you're reaching out and in the Townstone case, where they're talking about whether a particular staff is diverse, or whether you're reaching out and marketing to all markets and so on, having a concept where you're making sure that you really are creating a wholesome and fulsome kind of a process, so that you're trying to pick up new business, and you're making sure that you cast your net wide. It doesn't mean that you have to, it's not like a quota system or anything like that, but taking into account that you're trying to make sure that you have looked at everything and talked to everybody that you can, is probably not a bad idea. And not to mention that you probably find, there are a few good groups out there actually that are really trying to make sure that people are finding good talent and good staff and NAMBA and others that are really good organizations that have a surprisingly number of attractions for people they just want to figure out how to get into good positions, and NAMBA does it. NAMBA is just one of many, but does a great job of introducing people to others and learning about this type of system. NBA does a great job. There's a lot of them out there.
Yeah. So we have a question, but I'm going to actually hold it till the end because I think it kind of wraps up everything kind of well, this question. So I'll come back to this in a second for Katie who asked this. So because I do think it's a good wrap up at the end. Sure. I guess jumping into just probably the hot topic, maybe 8 years ago or so, LO comp and what's going on in the current market. It's funny. I've actually seen a lot of I don't think they use the word net branch, but a lot of that come back into the market. Distributive retail, I think, is what people are calling it, right. Which I know is probably a little bit different, but it's still we see a lot of that going on. I mean, I guess what's going on? What's the hot topics? Kind of thing. What's going on there with LO comp? Let's just touch on that for a minute.
Yeah, so LO comp is, it's always an issue in good times and bad times. People are always trying to find ways around or to solve for problems that have long been there. So LO comp came out in 2011, actually, from the Federal Reserve Board, even before the CFPB took over. CFPB changed a little bit in 2014, but it hasn't changed since then. And there's only been a few enforcement actions of note, but they were big. And it's because the LO comp rule is the kind of rule that, for me, creates problems for clients, creates real risk for clients, because if you get the LO comp rule, if you have a violation of LO comp rules, then it's probably not a violation. It's probably that every time you do a loan, you're rubber stamping a violation. And the penalties can be big. So the risk, I think, can be significant if you don't comply with it. Now, that said, the rules are somewhat vague, sort of like some of the other rules we talk about frequently, like RESPA Section 8. There's these rules that are out there that have been around forever, and still nobody really agrees on what they actually mean. And LO comp is sort of like that. But pricing concessions is always a big topic, and just as much today as it ever was. I get calls probably every week where people are asking, hey, so we know that we can't tag LOs with pricing concessions, generally speaking, but that said, how do we tag LOs with pricing concessions? You can't. And there are a lot of people that are, feeling the pressure and saying, well, look, we know that big company LOs down the road, they're doing it, and little company down the road LOs, they're doing it, and we want to do it too. And I guess that's a business decision whether you want to take on that sort of risk or not. But the CFPB has made pretty clear that concessions are not something that you can tag an LO for. And so that's a big one. That also raises some fair lending questions that ties back into the fair lending conversation we had a few minutes ago. There are also a lot of questions about multiple channels. There's always the questions of bond programs, which are really designed to help sort of first-time home buyers and the like, and the question of whether you can make an LO pay or if you can pay an LO differently for bond programs and the like. And CFPB is aware of the issue that you can't, and they made clear that you can't. But there's been no real relief in that regard yet. Lots of questions sort of like that where people are asking to pay differently on different products. As a general matter, the CFPB would tell you no, that you can't do that. But that's a big issue because everybody's just trying to figure out a way. LOs are are still in high demand. It's a highly competitive marketplace, as you know, and trying to attract good talent. Everybody is demanding, for good pay, and they're not, they are okay sometimes not having to play by the rules, because the biggest risk really is probably with the companies. Although I will say that, and LOs, I think know this to some degree, that the LOs themselves have risk under the current rule that they can be penalized themselves and put out of the industry. The CFPB is quite willing to go after individuals themselves, but so far we haven't seen a lot of action. So in that regard, and on the LO side, so
we get this a lot, especially in the population moving from broker to banker, or new clients just in general. And we will hear stuff. Oh, well, like you alluded to. Well, this guy down the road's doing this.
Yeah.
But how do you respond to that, I guess?
Yeah, I mean, it is a constant issue. Now, to be clear, that issue arises when business is fantastic. It arises when it's mediocre, and it arises when it's bad. But the first question, I think, is the person they're talking about really doing that? Because I think that there's a lot of myth that's different from reality. And I very frequently hear about the people down the road doing this, but I hardly ever see any evidence that it's really happening. But if there's smoke, a lot of times there's fire, so it very well could be. Alternatively, it could be that the LOs understand it differently, or they're negotiating. They're trying to get some sort of an approach that they haven't been able to get elsewhere, which could be a reason they might be trying to move. But it is a big problem. And you could have asked that very same question in the subprime days as well, right? And everybody was doing subprime, so am I going to do it or am I not? And it is a business choice, and it's a hard one.
Okay. Well, perfect. Well, let's go. We got about 10 minutes left. I want to ask one question to wrap it up here. So, let's run through a couple of these other ones. So on licensing, I know there was you were mentioning a case that was brought up, by the CFPB. Just give us an overview of licensing, what you're seeing, where you're seeing issues, that kind of thing.
Yeah, so licensing is always kind of an interesting issue, and there are a few different things that are going on that we are seeing. First of all, when people are moving, there's been a lot of movement of people from one organization to another in recent times. So the speeds at the regulators that are approving the licenses have been, there are a lot of states that have been sort of sluggish and slow in the pandemic times, especially. And so that's been a problem for people. That's starting to speed up a little bit, but still that it tends to be a problem. So that's one topic I think that is worth noting. They do seem to be getting better. Another topic is there seems to be a resurgence of the concept where people are saying, well, how about I am pick your category. I'm a real estate broker or agent, or I'm a consultant, or I'm a wealth advisor, but I'm going to be your loan officer part-time too. And then I'm going to refer loans over really to me and do loans with you in that context. And so that, there's a question there of if they really are referring to themselves, can they do it first, but then also do they need the license? And if they're doing loans, they need to be. But at that front end, if they're just talking to people and referring over, there's a question as to whether that, are they engaging in licensable activities there too? Also, I think on the side of trying to develop business and finding people that might be sort of loan officer assistants and trying to streamline processes so that you're paying lower rates to people. There are a lot of people that are loan officer assistants, and some of them are licensed, some are not. And there's real questions whether, it depends on what activity they're engaged in, but that's certainly something that people need to look at. And there was this case that we were talking about a little earlier was it's a case where the CFPB has gone after somebody really for that type of activity, where somebody was out kind of a finder of loans and then referring them into to the licensed loan officers, and the CFPB has said, well, these, and some states too have said that these particular individuals were engaged in licensable activity. They weren't licensed, and therefore they were in violation of the state licensing laws. But CFPB has gone after them too, saying that, well, it's a violation of the SAFE Act and the requirements under the SAFE Act. And UDAP also is a strong theory in that case, in the sense that if they were supposed to have been working with a licensed, trained individual and they really weren't, then was it unfair or deceptive when they weren't telling people, hey, I'm not licensed. And so there's a lot of allegations there, right? But yeah, that's where it is.
So I guess jumping in kind of maybe the last topic here, just to briefly touch on, because I think it is a kind of a hot topic and whatnot, just employment law right now. I mean, employment issues, what's going on? I mean, we still hear about, ridiculous bonuses, stuff like that. So like what, I mean, I guess it's twofold. What laws are we seeing, what issues? And then, is there a way for companies to protect themselves if they are issuing bonuses out there and to claw them back or whatever? So.
Yeah, and no, the bonus issue is a big one, and people as recently as 6 months, 8 months ago, there were a lot of companies giving away fairly significant bonuses, and in the heat of negotiations, a lot of times I think people giving big amounts and not really thinking through what happens if the market changes, what happens if it turns out the person doesn't stay, and so essentially kind of buying business up front, anticipating that everything's going to swimmingly, but then it's not always a fit, right? So they bring in a branch manager, for example, and the branch manager says, I thought it was going to be great here, but I don't really like it. Or they just get lured away by some other person paying some other big bonus. And, depending on whether you've, couple things, whether you've paid the money up front, which is a risk, and also whether you've documented your agreements properly, that you could put you underwater for some significant period of time, even if they stay, but also especially if they leave. And we have seen just a ton of people that they paid out money and not gotten anything out of it.
Yeah. Sure. So let's wrap up here with this, because I think you could probably talk for a few minutes on this topic. One of the questions asked was what does a good, or a great CMS look like? I mean, I think that's kind of overarching, kind of wraps in a lot of this stuff. I mean, if you just want to talk overall what client compliance management, maybe a global kind of strategy looks like. Right. Again, we've got 7 minutes, so you probably spend an hour talking about this, but if you just could touch on the high points, I think that would probably help a lot of people here as we wrap up. So.
Yeah, so a compliance management system really is kind of, think of it like the table of contents for all of your policies and procedures. So you got your policy on, I'll make an example, you have your policy on RESPA, you have your policy on marketing, you have your policy on credit, you have all these different policies, and this overarching credit or compliance management policy really just brings all that together, sort of the umbrella of it all, and talks to how are you going to identify the regulatory developments, for example, new changes, new rules coming into place. How are you going to get that information to the people that need to know it? Once they have it, how are you going to build that into your system? Once it's in the system, how are you going to check it and make sure that it's working properly? And then once you check it, make sure it's working properly, how do you monitor to make sure there are no lurking issues down the way? And throughout the whole process, how do you keep senior management involved so that they know they're making choices, and people who have the authority to make decisions, they are able to make sure that the policy is what they want it to be. And so that's sort of the overarching policy of it all. It's how does the whole thing run together? And the CFPB believes that that's a critical, if not a required piece of the policy structure that people have in place.
I'm assuming, and this is probably a very stupid question, but I want to put this out there because I've seen this sometimes. I mean, you can go out to, and I don't even know the names of the companies, but you can go out and buy, the policies, procedures, where they're documented and stuff like that. But I'm assuming it's more than just that. I mean, just having a document that says you do something, I mean, you actually have to be able to do it and show that you do it and show that you're following these policies that you bought, you know, somebody to write, but then you're actually doing what it says in the policy. I'm assuming, right?
That's right. And those policies, I mean, that I guess it's better than nothing sometimes, but the truth is, if you didn't write it yourself and at the company level, then it's probably not going to fit what you're actually doing. And what often happens, sorry, my battery just went out there. I'll keep talking and I'll change that while I'm doing it. So while they're buying policies like that, it very well could be that it says, for example, we got somebody who got this question the other day. It says you change you revise and refresh your employment agreement every year. Did you do that? No, we didn't do that. We're too busy. We got other things going on. So if it doesn't say what you're actually doing, you have both a potential problem for whatever it is they're talking about, but also then they will also frequently tell you, well, also you violate your own policy.
Got it. Okay, that's what I figured. I mean, we like I said, we've done a couple things here and there where we see that. Just was curious for that. So. I think with that, I mean, we've got 3 minutes left. Well, Casey can come back on and wrap up, but I just want to say, thank you, Troy. We missed a topic here or two, so we need to have you on again. So thank you very much for coming on. We always enjoy having you. And with that, Casey, if you want to come wrap us up, and if she's there.
I'm here. I just am going to be unpinned. I didn't want Troy to feel alone in having his battery go out. So I figured we just all stay dark. No, I'm sure I'll be unpinned here pretty quickly, but yeah, I mean, great webinar. Thank you so much, Troy and Dustin, for your insights and going through some questions. Thank each of you guys for joining today as well. I know it's a busy time. There we go. Look, Troy and I did that almost simultaneously.
It was perfect.
You can't even plan that. You can't even plan that.
Swoop in.
So yeah, everybody keep an eye out. We will have a recording going out either today or tomorrow. We also do a really quick survey at the end. It'll be kind of just as we wrap. We'd appreciate it if everybody would take just a minute or so to go ahead and fill that out. It just lets us do a better job of making sure we're providing really relevant topics and doing our best to bring the information to the table that everybody wants. Other than that, happy Friday Eve, and hopefully we can all go rest our voices for a couple of days.
Well, thank you guys.
Thank you.
Yeah, we'll see you soon.
Okay.
Thank you.
Bye.
Bye, everybody.